The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Welcome. That's not the way to start off the show. Good afternoon, everyone. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you, wrapping up the week here. Another solid week of constructive trading for the major averages. We'll check in on the S&P 500, NASDAQ Composite, Dow in just a little bit. First of all, a few house cleaning items. Don't forget to join me January 17th, next Thursday, for a free webinar. It's my first webinar of the year for TFNN. It's titled 2013, A Year of New Leadership. I'm optimistic about a decent year for stocks this year. We'll be talking about my outlook for 2013 and going over some names that I think have the potential to be big leaders in 2013. So that'll be Thursday, January 17th. At 6:30 Eastern. Now, here's the rub. You have to be a subscriber to my Ultimate Growth Stocks model portfolio. And being a subscriber for this webinar means that if you have a 30-day free trial subscription, you are also able to attend. So, why not check out the newsletter for 30 days free? There is absolutely no obligation, but it will entitle you to attend the webinar next Thursday free of charge. January 17th, 6:30 Eastern. More info right on the homepage of TFNN.com. And then don't forget another silver giveaway going on at TFNN, the Great Panther Super Silver giveaway. We're going to be announcing a winner every broadcast hour from January 28th through February 1st. And sign up for free on the homepage of TFNN.com to win a chance to win a free piece of silver, beautiful silver coin from Great Panther Silver. So you can check out that on the homepage of TFNN.com as well. 877-927-6648. That's the number to use if you want to give me a call, talk about this market. And you can catch my show every day, daily on TFNN from 3 to 4 Eastern. It's also available as a podcast on iTunes if you can't listen live. If you're over at iTunes, feel free to leave a review. Positive review always helps. Appreciate that. And don't forget, you can listen to all TFNN programming on your smartphone. A lot of people do that these days. Plug those earbuds in. All you have to do is open your smartphone browser, type in tfnn.mobi. Very easy to listen that way. And if you want to look at charts live right along with me, you can use Tiger TV to do that. If you're on your PC, TFNN.com, the show is carried live on Channel 1. It is archived on Channel 13. Tiger TV can also stream on your handheld device. Same thing, open your smartphone browser, type in TFNN.com, and then over on the right-hand side, top right of the home page, you'll see a box with some mobile devices in there. Just click that, and Tiger TV will start to stream on your smartphone. All right, taking a look at the major averages here. Let's go ahead and refresh this daily chart for the NASDAQ Composite. This is the NASDAQ Composite with the 10-day, 20-day, 50-day moving average plotted here. Once again, tech index holding on to gains here, trading in a nice tight intraday range today, down less than a point to 31.20, almost 31.21. You can see the NASDAQ's 20-day moving average here basically coincides with its last breakout area. You see this gap up on January 2nd. So if the NASDAQ does eventually come down and fill this gap, which I'm just not sure it's going to do in the near term, I think there's probably a better chance we're going to retest this September high before the NASDAQ fills its gap. But if it does decide to fill the gap before it tries for a breakout here, I think that 30.48 level, is right where the 20-day moving average is. We could come down to that area, fill the gap, but we'll see what happens. S&P 500. Let's take a look at the benchmark index. And we'll see that this one is trading in a tight range as well. Very tight range. Hits a high of 1472 today, a low of 1467. So a 5-point intraday range for the S&P 500. This is what just supporting action looks like, folks. This is why it's reasons to be optimistic about the market here. Just no sellers around. The technical picture of the market looks pretty good here. S&P 500 down 2 points to 1467, and finally the blue chip index, Dow Jones Industrial Average, it is up almost 3 points today to 13,474. Volume today in the major averages tracking pretty close to what we saw on Thursday. Let me get a quick read on that. NASDAQ volume right now tracking about 2 to 3% higher than Thursday. Thursday's volume on the NASDAQ was 1.73 billion shares. Volume lighter on the New York Stock Exchange today. Yesterday we saw 722 million shares trade hands. We are tracking 10 to 15% below that level today. Checking in on the yield on the 10-year note. Let's do that. That's going to be ticker TNX here. Bond yields have eased off their highs. The 10-year note hit a high today of 1.93%. It right now is at 1.87, and the yield on the 30-year bond, that'll be TYX here, also well off its high today. The yield on the 30-year bond went up to 3.1%. Right now 3.05%. So bond yields look to be lower for the fourth session out of the past 5. February gold today settled at $1,660.60 an ounce, down $17.40, 1% decline for February gold. For the week, it was up 0.7%. Let's take a look. I don't know if you saw Tom O'Brien on TFNN, or from TFNN earlier early this morning on CNBC, talking about some of these gold names taking out lows in heavy volume. So some of these gold stocks look vulnerable. Have to say the same with the GLD. I'm right with him on this one. The technical picture of the GLD continues to look very weak as well. Today the GLD down $1.14, 0.7% to 160.84. Having a problem here with its 200-day moving average. It tried to reclaim the 200-day line back in late December, failed, tried to reclaim it again, looks like it's failing again. So buying demand seems to be completely drying up in gold here. Checking in on the U.S. dollar index, was not too many people were talking about it that I could see, but the big drop in gold yesterday, you can see that on the daily chart here. The U.S. dollar index tried to reclaim its 200-day moving average here, 80.84, and it was turned away with conviction. It closed yesterday at 79.74. It is lower again today by about 0.3% to 79.53. Now, we go to this chart that I have, a weekly chart for the U.S. dollar index. We've been showing this on the show in recent days because this is a head and shoulders pattern here. You can see on Tiger TV the left shoulder here, the head, the right shoulder, and this a possible break below the neckline here, which is going to be underneath 79, could bring a trip down to 78 in place. And when you're talking about breakouts to the downside, it's almost like this trapdoor effect. So it remains to be seen if it's really going to be a precipitous decline for the U.S. dollar index. Right now, it looks like the greenback wants lower. So we'll continue to keep an eye on the U.S. dollar. Of course, the stock market likes a weak dollar. That's another feather in the bull cap right now. February crude oil today down 26 cents to 93.56 a barrel, up 0.5% for the week. Some of these refiners looking really strong here. Delek, U.S. Holdings, two small caps actually in my screens today. Ticker DK on the New York Stock Exchange. Made a big, working on a 3-session winning streak. Big move yesterday, flirting with a breakout, and it does break out with conviction today, up 9.5% to 29.54. Take a look at a weekly chart for Delek, and boy, I mean, this is really what a clean technical breakout looks like here. Really a lot to like here. Just sideways movement, a breakout today over 28 thereabouts. So looks very strong. Symmetrical breakout, big volume in the stock today. And then also ALJ. This is a stock that made a big move. I think it was last week or the week before, but you can see this huge move the stock made, and look at how trading has tightened up here. So it's really showing good supporting action here. ALJ on the New York Stock Exchange, another small cap refiner, up 13 cents today to 17.52. If it continues to move sideways, trade tightly, not out of the question that we could see renewed price strength in ALJ. Technically looks pretty healthy here. Interesting report from Bank of America Merrill Lynch Global Research today. They said that $19 billion flowed into U.S. equity funds for the first full week of the year. That's the most since June 2008 and the fourth highest since 2000. Whether or not this market uptrend works is going to be predicated on whether or not new institutional money, continues to come in from the sidelines. Of course, newsletter writers like myself, of course, we want to see, the mom and pop investors come back into the market. There's a lot of distrust of course, but really the main drivers of supply and demand in the market are the institutions. That's why I pay a lot of attention to them. That's why I pay a lot of attention to supply and demand, price and volume in the major averages, price and volume in individual growth stocks. But this market uptrend is going to need new institutional money to continue to come in from the sidelines. I think there's a chance it could happen. I think that fourth quarter earnings season probably is going to be a little better than what's expected at this point. Now, what happens after fourth quarter earnings season? We end January. The market doesn't have anything to focus on anymore. Assuming fourth quarter earnings are good, I think January could be a good month. But we'll continue to monitor supply and demand. We'll see what these major averages look like in February. You start to see signs of heavy volume selling. Probably time to take the foot off the accelerator. Maybe take partial profits or even full profits in some cases from many of these stocks that have been working nicely over the past several weeks. Taking a look at earnings. Let's take a look at Wells Fargo. We heard from Wells Fargo earlier today. It's a very busy week. Next week of financial earnings. Wells Fargo kicked things off today. The numbers weren't too bad. There was concern about a decline in net interest margin. It decelerated from the third quarter. It was also down from a year ago at 3.56%. But the numbers weren't too bad. Up 25%. Earnings up 25% to 91 cents a share. A little better than expected. Sales were up 6% to $21.9 billion. That was nicely above expectations. Stocks hanging in there, trying to break out over 35.19. It's having a problem mustering up buying demand here. Right now, stocks down 42 cents to 34.98.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you, talking about earnings from Wells Fargo before the open. First break came up kind of quickly there, but stock is down 42 cents today to 34.98. It actually broke out over a swing point yesterday of 35.19, perhaps in anticipation of good earnings. And again, the numbers were pretty good. I think next week when we hear from Goldman Sachs and J.P. Morgan, Bank of America, several other financials, I think the numbers should be pretty good. But then again, a lot of these stocks have been rallying pretty hard into earnings. So whether or not, good results are going to be enough to lift the stocks further, as we're seeing with Wells Fargo today, numbers pretty good, but stock really isn't doing much, down 1.2% to 34.98. Pretty heavy volume. It is trading up near its session high after hitting an intraday low of 34.53. Also saw pretty good sales, or better than expected sales, from tech outsourcer Infosys, based in India. It's a company that provides business consulting, technology, engineering, outsourcing services. Massive gap up for the stock today, up 18.9% to 52.25. The Numbers didn't look that great on the surface, but the sales were better than expected. Earnings fell 4% to 75 cents a share. That was 3 cents better than expected. Sales were up 8% to $1.9 billion. The estimate was for sales of $1.85, so slight beat on the top line. This is a stock that's heavily shorted. It's always had a high short interest at the mid-December. About 28.2 million shares were held short. So this looks like a big short squeeze to me, but a bullish day for Infosys. And speaking of India, Infosys is based in India, and there's an interesting financial big bank in India called HDFC Bank. You can see kind of mostly a low-volume pullback to the 50-day moving average, firming up here. This is interesting stock to keep an eye on. You can see after a nice breakout in November, just kind of an orderly pullback to the 50-day. It looks like it's finding support here, so showing good technical action up to this point. Another stock in Infosys's industry group would be Cognizant Technology Solutions. Basically the same business. Cognizant riding INFY's coattails higher today, up 4.6% to 78.47. So Cognizant, another tech outsourcer, having a good day as well. Checking in on shares of Philip Morris, ticker PM. This stock was added to Goldman's conviction buy list today with a price target of 103. Stock is up 2.2% today to 89.23. Nice gap up. It is flirting with a little move over resistance here at 90. It hit an intraday high today of 89.83, but pulled back a little bit. So I would say be bullish if Philip Morris can take out this 90 level in heavy volume. Anyway, gets added to Goldman's conviction buy list. Ford also added to Goldman's conviction buy list today. Shares of Ford, you can see, have really been on a move here. Recent breakout over $11.50 thereabouts. Very extended stock up here. So even though you've got positive comments made by Goldman today, you don't want to chase a stock when it is so extended in price. This is just a classic example of what an extended stock looks like. So Philip Morris, not so much so, but Ford, very extended up here. Boeing continues to face selling pressure. This Dow component, of course, their Dreamliner jet. There was an electrical fire on a unoccupied Dreamliner on a runway in Boston. Just recently, the FAA is going to launch basically an investigation, just a safety review by the FAA. And FAA official today said that they are fully confident that this is a safe jet, but they're going to follow protocol and do their due diligence, just make sure that everything's okay here. But Boeing down 2.6% today to 75.07. Rough week for the stock. Wasn't that long ago. Boeing was at 78 last week. It fell hard Monday and Tuesday, rallied back Wednesday and Thursday, under pressure again today. As you can see, though, still holding above its 50-day moving average, so not a breakdown by any means. Taking a look at shares of J.C. Penney. Under pressure again. You can see what resistance at the 50-day moving average looks like here. This is, it's uncanny once that the support levels turn into resistance. JCPenney down 4.8% today to 18.23. Downgraded to sell from neutral at UBS. The company, UBS, that is citing deteriorating earnings outlook and mounting signs of cash flow distress. Price target lower to 13 from 21. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back to Breakout Investing, 877-927-6648. Let's talk to Rick in Orlando. Happy Friday, Rick. How you doing?
Happy Friday, and thanks for taking my call and all the work you do, Ken.
Appreciate it.
Recently, I watched the TLT and the UUP because I can't get some of the things that the guys with fancy systems get, you know. So I use those for my bonds and dollar. And it seems like recently now they've been tracking the wrong way. In other words, like divergence with the market, because usually they're in or out of phase, 180 degrees out of phase usually. So have you noticed that, or am I?
Yeah. No, I mean the U.S. dollar remains under pressure. So the TLT's been under pressure too, but it has started. The TLT has started to rally back over the past 5 days, and the U.S. dollar got killed yesterday, and it's under pressure again today. So So what are you thinking? Are you just?
I used to be able to use it a little more reliable for which way we're going. But when it does like it's doing, I start pulling my hair out.
Yeah, it gets a little trickier, definitely. My take right now is that I think the potential for more downside in the dollar is there. I don't know if you've been listening to the show in recent days, but I wouldn't be surprised to see the dollar continue to act weak. That should be good for stocks. The thing about the TLT is that it did recently come down and test a low that it put in back in mid-September of 118.05. Volume there at in mid-September was about 16.9 million, and in early January it came down volume of about 9.5 thereabouts. So wouldn't be surprised to see the TLT start to inch up a little higher here. I still see pretty significant resistance at the 123 area, but my general take on things, I wouldn't be surprised to see the TLT start to rally a little bit. But for that to happen, we're probably going to have some disappointment. When it comes to fourth quarter earnings, we're probably going to see some softness in the.
Yes, that may help it out there then, huh?
Yeah. So
looking back at September, I see what you're talking about. That was a high volume candle, and when we came down into the candle, it had maybe 2/3 or half of the volume.
Yeah, exactly.
As opposed to what it was in September. Yeah, okay.
Yeah, so you could see a little movement higher in the TLT. I still think that this is, this would be it still looks like the TLT, no matter how you slice it, has been under distribution for quite some time. It still looks. It doesn't mean it can't rally a few points, from here up to that 123 level. But I suspect that even if it does get back up to 123, it's probably going to get turned away there. You get turned away again. But the dollar definitely looks weak to me here.
Okay, so we're probably not going to go down quite yet then. Well, maybe towards the end of the earnings season here.
I think that is a more likely scenario. The indices are so close to their. The Nasdaq is, just 2% away from its September high. The S&P 500 yesterday closed 2 points underneath its September high. So there's still buyers around. Now when fourth quarter earnings season ends, when January ends and the first couple weeks of February, the market's character may change a little bit. But if that happens, we'll start to see higher volume declines in the major averages. You'll start to see heavy volume selling coming into some of these stocks that have been doing real well the past few weeks.
Okay, it's a time for patience then, isn't it?
Yes, sir. Yes, sir.
Okay, thanks, Ken, for your help there and your analysis. I sure appreciate it.
All right, Rick, always appreciate the call. Have a great weekend.
Okay, you too. Bye-bye.
All right. Rick's good man, fun-loving guy. Always like talking to Rick. But that's kind of the U.S. dollar and bonds. I think that bond yields can probably continue to move higher here. But when you look at that TLT, which is basically a long bond ETF, wouldn't be surprised to see a little tradable pop here, a little move higher in the TLT just for a trade. I think that 123 level. For the TLT, or at least the 50-day moving average here at 122.81, could end up being resistance. And then when it comes to the U.S. dollar index, at the top of the show we talked about this head and shoulders, bearish head and shoulders pattern. So I think a break below the 79 level for the U.S. dollar index is a distinct possibility at this point. Taking a look at some recent breakouts that are kind of having a hard time making headway here. Amazon.com not really doing anything wrong. It broke out earlier this week over 263. You can see that big move it made on Monday, and then really no follow-through. It's just been moving sideways, not doing anything wrong, but and still within buying range for that matter. It's right now trading at 267.61, so only about 4 points above that swing point of 263, up 0.9% on the day. Shares of Google flirting with a breakout here. Google, the swing point here back in December. What was it? I think it was 738. I think was the 738 was the swing point. Yeah, that was the high set right here, which was in December, and it was December 17th intraday high of 738. So it is at 739.36. So, another stock that is trying to break out here, but not really making a whole lot of progress. And then, of course, there was a big move in shares of LinkedIn. Yesterday, the company said that its user base now stands at 200 million. A good, powerful breakout for the stock yesterday. Hits an intraday high today of 119.80. Has reversed and is mostly unchanged, last trading at 118. So still like the potential in this stock, and I think it's along with Facebook, I think LinkedIn is another stock that could that will likely benefit from more mutual fund ownership in 2013. I think this one could still be in the early stages of a move here. Taking a look at Apple. Apple at last check was lower. It is down $3.22, 0.6% to 520.29. The 50-day moving average here at 546 looks to be resistance for now. Apple just really struggling with a lack of buying demand here. Interesting. I think it was yesterday or early today, Phil Schiller, he's the head marketing guy over at Apple, he denied reports that Apple is considering a cheaper iPhone. So that was a story earlier in the week. What is this next growth driver going to be for Apple? Is it going to be Apple TV? Is it going to be some sort of wearable computing device? Are they going to come out with a cheaper phone? Well, Phil Schiller said that Apple is not considering a cheaper iPhone at this point. Another stock in the news today, BBY, which is Best Buy. They reported same-store sales in the November-December period, basically holiday same-store sales, fell 1.4% from the same time a year ago. That was actually better than expected. Just domestic same-store sales were flat. Overall sales fell to $12.8 billion from $12.9 billion. Look at the stock, though. It is up 16.4% today to $14.21. It did manage to pop over a resistance level here at 1290. Don't think Best Buy is buyable right here. Obviously, this is a company that still has loads of fundamental problems, earnings growth, sales growth, all these types of things. But stock's having a good day today, and market likes it's better than expected. Sales growth during the holiday period. Mentioned shares of Facebook. You want to be careful not to chase Facebook here. This is a current holding in the Ultimate Growth Stocks model portfolio. It's probably looking a little toppy here. May see a near-term pullback, but nice breakout for Facebook recently over that 28 level. Don't forget next week, January 15th, the company is having a media event, and we're going to see some sort of product announcement, maybe, or there's a lot of buzz about what it could be. But sentiment definitely improving around shares of Facebook. I'm not sure what it means, when I go through my screens every day, and I'm long 8 stocks right now in the Ultimate Growth Stocks model portfolio, which is pretty much where I want to be. I don't want to get to a point where I have 10, 12, 14 stocks in there. It's hard to keep track of that many stocks, but with 8 long positions right now, that's probably about right at this point. Even if I did want to add some new names, it is getting harder and harder at this stage of the game to find actionable long opportunities, and that's because a lot of growth stocks have been running higher for several weeks now. In fact, I am seeing more actionable short ideas than long ideas, and I want to first take a look at Panera Bread here. PNRA. Stock is under some pressure today, down $3.77, 2.3% to 162.76. Now, let's swing over, take a look at a weekly chart for Panera. To me, sometimes weekly charts just have a look to them, a look that reveals a pretty severe dry up in buying demand, and that definitely appears to be the case with Panera. You can see it's been a pretty strong performer for several months now, and still holding above its 40-week moving average here. But you can see, what was it, 3-4 weeks ago, there was this big heavy volume reversal, closed just above its 40-week moving average. Found support, rallied back above this support level, but stock is under renewed pressure today. The bottom line, when you look at the recent weekly price declines over the past 7 weeks or so, you're now looking at possibly 4 higher volume weekly declines over the past 7 weeks. That points to mild institutional selling. When you're looking to short a stock, you want to look at stocks that are under distribution. You want to look at stocks where supply and demand is not working in the stock's favor. This is a stock where buying demand is clearly drying up, and when that's the case, sometimes it can pave the way for more sellers to come into the stock. PriceSmart, we heard from PriceSmart earlier this week when they reported earnings. It was a very bearish day for the stock yesterday. You can see it hit a high of 82, closed at around 77 thereabouts. It's up $1.46 today, but really showing volatile price action. And when you look at a weekly chart for PriceSmart, you also see a stock that headed into earnings was under a lot of distribution, probably more so than Panera Bread. So another example of a stock that's still holding above support here, but still on the watch list here as a possible short. Panera's not ready yet. PriceSmart's not ready yet, but their weekly charts are starting to look vulnerable. So we're just going to keep an eye on these, keep them on our watch list, check in with them occasionally. They're looking fairly weak at this point. Perrigo underperforming quite a bit today. This is a generic drug maker. Big move downward for the stock today, down 6% to 103.89. We look at a weekly chart for Perrigo, and this is yet another example of a stock that it looks like it's in trouble here. It's been under selling pressure for several weeks now. Break below the 10-week moving average, try to rally back above. You've got these moving averages that are now turning into resistance levels. So another stock that's starting to look very tired, buying demand drying up, and also ISRG, Intuitive Surgical. I remember it was Citron Research that came out with a note in December kind of questioning the company's fundamentals. Big sellers in the stock in December. It's been rallying back in light volume here. Take a look at a weekly for Intuitive Surgical, and this is, again, a stock that's trading at 505.97 right now. 516 looks to be, basically 516, 520 look to be significant resistance levels here. Wouldn't be surprised to see ISRG turned away if it does eventually get back up to these resistance levels. So may see a little bit of a rally here in Intuitive Surgical, but this is another one looking like a possible short here. So bottom line is I'm content with what I own right now. I'm content with my long positions. I have one short position. Don't forget, if you do want to try 30 days free, 2 Ultimate Growth Stocks, you can do that right on the homepage of TFNN.com. Easy sign up, and if you sign up over the next few days, you can come to my free webinar January 17th at TFNN, 6:30 Eastern. It is a subscriber-only webinar, but why not take advantage of 30 days free, see how the model portfolio has gotten off to a great start in 2013. I feel like I'm well positioned and in the right names here. We'll be proactive, we'll be nimble if we have to be, but check out 30 days free. What do you got to lose? We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. One chart I wanted to look at here, Ixia. They make Ethernet interface cards that basically are used to test the performance of networks. And you had a little breakout for the stock over 1740. Now, a little handle area forming here. So we could get another opportunity to get into Ixia XXIA on the NASDAQ. Keep an eye on this one for a breakout over 18. Good growth prospects here. It's a small cap stock with a market cap of $1.3 billion, average daily volume around 550,000 shares, but sales growth has been accelerating in recent quarters. Company makes a good product. It has definitely been under accumulation. You know, when you look at the rally that the stock has been on since mid-November, there actually have been quite a few higher volume gains, so some conviction behind the buying. So it's taking a little breather here, taking a little rest, and keep an eye on this one because it could try to clear 18 in coming days and weeks. Let's check in on the markets here as we put the finishing touches on today's market. NASDAQ Composite up near its session high now, trading in a very tight range today, up 3 points to 3,124.88. If the NASDAQ continues to move higher, get closer to its September high of 31.97, again, it's got about another 65 points or so to get there. Sometimes as a stock or index approaches a prior high, sometimes you do get a little bit of a pullback, a low volume pullback. If it's in low volume, if it's an orderly decline, that often paves the way for a technical breakout. So NASDAQ, could just try to take out its September high of 31.97 without pulling back a little bit, but wouldn't be surprised to see a little bit of a shakeout before a breakout here. Really same with the S&P 500. It's much closer to its September high, and that high is 1474 set back here. S&P 500 is 1471, so it's only about 3 points underneath that. Could see some sideways movement here, maybe a little downdraft, and again, that could set the stage for a nice move higher for this market. Right now, S&P 500 down fractionally to 1471, and the Dow Jones Industrial Average also up close to 7 points now to 13,477. So it still has a little ways to go to get to its September high as well. But overall, the market's technical picture looks fine here. I think it's going to be next 2-3 weeks are going to certainly have more positive stories than negative ones when it comes to fourth quarter earnings. I think there are going to be plenty of bright spots, and going to just kind of sit tight with current long positions in the Ultimate Growth Stocks model portfolio. Stick with the short position that I have working right now, and as always, we just kind of take the market on a day-by-day basis, make sure that overall market trends are positive to be long. Next week, a busy week of economic data. We've got retail sales for December on Tuesday. We've got inflation data, producer price index on Tuesday, the consumer price index on Wednesday. We've also got manufacturing data, Empire Manufacturing on Tuesday, the Philadelphia Fed on Thursday. We've got housing starts, building permits on Thursday as well. So a whole bunch of economic data to ponder next week. And then earnings. Let's take a look at shares of Lennar. It reports earnings on Tuesday. It's been hitting new highs in light volume in recent days. That's a bit of a red flag, especially with all the distribution that was seen in the stock in November, December. It's down 15 cents today to 40.87. Then busy week of financials again next week. Goldman Sachs, JP Morgan Chase, Bank of America, Citigroup. Also going to hear from GE and Schlumberger as well. Have a great weekend, folks. Coming up next, the Tom O'Brien Show. I'll see you back here on Monday.
Let me tell you something.